You're going to want to buy every share you can because these three stocks are the steal of the century. Over the past few weeks and past few months, I've been talking a lot about Micron stock and how I thought it was about to go on a major rally. Micron was up 15% on Friday. It's up 37% over the past week, and it's up 121% over the past 6 weeks. Hopefully, you bought Micron stock over the past few weeks as I've been talking about it, and you profited right along with us. But if you didn't, it's okay because I found 3 more stocks that I believe are about to rally, just like Micron did. Now, for those of you who are new to this channel, before I get into the 3 stocks that I believe are undervalued and about ready to skyrocket, I first want to mention 2 stocks that have been talked about a lot in the comments. I do read your comments. I read every single one of them, and I thank every single person for commenting on my videos. And in those comments, I found 2 stocks in particular that a lot of people have talked about, and I want to discuss them before we get into my top 3 stock picks. The first one is SanDisk, ticker SNDK. And everything I mentioned about Micron is also true of SanDisk with one slight exception. SanDisk's valuation is about double that of Micron. And I'm not just talking about the stock price, I'm talking about the PE ratios. That is how the stock price compares to the earnings. SanDisk is a great stock to buy. If you like SanDisk, you should like Micron twice as much because Micron is valued at half of what SanDisk is. And don't get me wrong, they're both great companies. I would love to own both in my portfolio. While Micron has a forward PE ratio of 8, SanDisk has a forward PE ratio of 9. They are both extremely undervalued, and I believe both of those are going to continue to double in price over the next few months and year. SanDisk's earnings have been on a parabolic run higher, and I believe they're going to continue to go higher in the future. And I also believe that this forward PE ratio of 9 is still extremely low, and I think this is going to go a lot higher. So if you want to buy SanDisk, I'm all for it. I think this is a great stock to buy, and it's a great complement to Micron. The other stock that people have been mentioning a lot in the comments is Intel, ticker INTC. And Intel has been on an absolute parabolic run over the past few months. The stock was up 114% last month, and it's up another 25% this week. In total, Intel is up over 250% this year. And while there is some legitimate hype around Intel, such as the recent deal they just made with Apple, the rally over the past few months has been heavily manipulated by Donald Trump. Last year, Donald Trump announced a 10% stake in Intel. And as the President of the United States, he has a lot of power to get deals done and to manipulate stock prices. And that is exactly what happened with this Apple deal. When President Trump personally advocated for Intel to cook in a meeting at the White House, President Trump went on to say, "I like Intel," and that the government has made tens of billions of dollars from the Intel deal. The problem I personally have with Intel are the fundamentals. The fundamentals of the company, the revenues and earnings, they're complete crap. Intel is not profitable. In fact, they've only had 1 profitable quarter in the last 8 quarters. And I hate to say it, but I think Intel is just one big pump and dump. We had the big pump, and now I think we're about to get the dump any week. And you might be asking yourself, well, Scott, didn't you advocate for Intel last year and say we should buy the stock? And yes, I absolutely did. But now that it's up 250% this year, I'm now saying that I think it would be best to sell the stock and take profits and to move money into something else. Now again, this is not financial advice. I'm not telling you what to do. I'm just letting you know what I would do. And when it comes to what to move my money into, I found 3 stocks that I think are the steal of the century and about to rally massively. But before I get to those 3 stocks, I first want to show you how I researched these. When I'm researching stocks, I use Moomoo's incredibly robust free stock screener. Moomoo's stock screener allows me to find undervalued stocks by filtering on a wide variety of fundamental and financial information on the company. And for short-term trades, I can use the stock screener to find all kinds of bullish technical signals. When I'm ready to research a stock further, Moomoo makes it easy to see how valuable the company is using their graphs and charts. And digging into the financial statements is a breeze, being able to see the company's increasing or declining revenue with a simple graph. Moomoo also provides the same graph for the earnings and every other item on the financial statements. And Moomoo provides analyst ratings free of charge with no monthly fees, so I can quickly see what analysts are expecting the stock to do in the future. One of the most important things I look at is the insider trading activity. This is another free feature that Moomoo offers. I look for the golden buys from insiders with the open market acquisitions, which means insiders went out onto the open market and bought the stock. This is the most bullish insider activity you will ever find. And before I talk about a stock on this channel, I also do some full technical analysis to make sure that stock is bullish on the technicals. Moomoo has dozens of technical indicators available, including the most common ones, as well as a large number of specialized indicators that I used at companies like Merrill Lynch and Morgan Stanley. And best of all, Moomoo is offering 8.1% APY on your uninvested cash for the first 60 days, plus up to $1,000 in free NVIDIA stock when you open your account and fund it. You can get more information about Moomoo using the first link in the description below. Now, the first stock that I think is about to go on a massive run is Supermicro Computer, ticker SMCI. And I know they've had a lot of accounting problems, but in a minute I'm going to show you why I think things have really turned around for this company and why I think they're about to go on a parabolic run. First, if you look at the daily chart, you can see that Supermicro has already started its parabolic run. The stock is up 75% over the past few weeks alone, and the stock was up 30% just last week. And that came on some really strong volume. And whenever you get a big move upward combined with high volume, that shows that the move is legitimate, and more than likely it's going to continue. And outside of Micron and SanDisk, it's very hard to find a stock in the technology sector that's undervalued. But Supermicro is one of them. It has a PE ratio of 18 and a forward PE ratio of only 12. And when you look at Supermicro's revenues, it looked really good 2 quarters ago, and then fell off a little bit last quarter. But there was a reason for that was beyond Supermicro's control. Tech stocks as a whole are facing a new AI hurdle, mainly a widespread component shortage. And server maker Supermicro Computer said on its May 5th earnings call that the fiscal third quarter revenue of $10.2 billion was impacted by customer site readiness delays, as several customer sites like data centers were not yet equipped with the equipment needed to power cloud capabilities. And that is why I believe Supermicro's revenue is going to recover next quarter and continue to go higher. Now, the most amazing part about all of this is even though they took a revenue hit last quarter just due to a component shortage, their earnings continue to grow, and earnings have been growing extremely well over the past 3 quarters. And that is why I think it's pretty clear to me that Supermicro has turned around the problems that they were facing last year. We are now seeing consistent earnings growth, and I do think this is going to continue in the future. Now, I don't think Supermicro's necessarily going to get back above $100 per share this year, but I do think a rise up to $60 per share this year is very reasonable with a potential rise back over $100 next year. So, I think now is probably the best time to get into Supermicro. I'm not sure you're going to get a much lower price on this. The next stock on this list is one that has been the center of constant discussions around the viability of this company. A lot of people see this company as a bit of a scam, but when you dig into the actual numbers, they just don't lie. This company is solid, they're profitable, and they have a massive amount of assets, and I believe this company is poised to double, triple, or even quadruple over the next 12 months. And that stock is Strategy, previously known as MicroStrategy, ticker MSTR. And MicroStrategy generally follows the price of Bitcoin. And over the past couple of weeks, we have seen a very clear bottoming on the price of Bitcoin with a now sustained rally over the past 6 weeks. And I do believe Bitcoin has bottomed out. I do believe it is about to go on another rally, and I have a 1-year price target on Bitcoin, meaning by summer of 2027, I see Bitcoin going to $240,000, double its previous high. And if Bitcoin does continue its sustained rally, then MicroStrategy should continue its sustained rally as well. And that is why I think MSTR could get back up to around the $450 price target it used to be at, or if Bitcoin doubles in price, we could see this double in price as well and get up to $900 to $1,000 per share. And if it does do that over the next 12 months, then buying it at $187 right now is surely the steal of the century. And the third stock on this list is one that I've talked about before, but it seems to have a lot of misunderstanding among retail investors. And I think the reason for that is because this company doesn't do a whole lot on the consumer side. This is really a company that's focused on companies and businesses and governments. And as a result, it's not extremely well understood by retail investors. That said, this stock is continuing to grow revenue, they're continuing to grow earnings, and I think this stock is about to go on a parabolic run. And that stock is Adobe, ticker ADB. And at first glance, you might think Adobe is a falling knife. After all, over the past couple of months, really the past couple of years, it's done nothing but go down. But I have a very good reason to believe that the stock is now oversold and about to go on a major rebound rally. First, if we take a look at the valuation of the stock, the PE ratios are quite low, with a PE ratio of 14 and a forward PE ratio of 13. Keep in mind that most tech stocks are trading at a PE ratio of 30 or higher, meaning Adobe would have to double or even triple in price just to get up to the average price of the average tech stock. And revenue growth has been extremely consistent over the past couple of years. This is a company that continues to grow revenue year after year after year, and it's not slowing down anytime soon. Profit growth has also been phenomenal over the past 3 years after we came out of the pandemic, with only 1 quarter seeing a decline in profit just due to a one-off situation. So, with revenues and earnings both rising, why is the stock selling off? It doesn't make any sense. And this inconsistency or imbalance provides an amazing buying opportunity. Because while Adobe continues to increase revenues and increase profits, the stock continues to sell off, meaning the overall valuation is getting cheaper and cheaper and cheaper. And it's gotten to the point where I think it can go any lower, and I have a very good reason to believe that we have already bottomed out and that we're about to go on a parabolic run. Pay attention to the monthly chart on Adobe, and I want to take you all the way back to the dot-com bubble. On the left circle here, you can see that Adobe bottomed out at the end of the dot-com bubble at the 300-month EMA. It then went on a major rally, and then it bottomed out again at the end of the financial crisis once again at the 300-month EMA. After it bottomed out, it went on another major rally. So every single time Adobe sells off and hits the 300-month EMA, it goes on a major rally. And once again, we are at the 300-month EMA, and that is why I believe Adobe's going to bottom out here just like it did at the end of the dot-com bubble, just like it did at the end of the great financial crisis, and I believe it's about to go on another major rally. And that is why I think Adobe is for sure one of the steals of the century. Let me know in the comments below which stocks you're buying. Let me know if you made money with Micron or Seagate Disk with us. And also let me know if there's any other stocks that you want me to analyze in future videos. I'll read through your comments, pick the ones that are most talked about, and we'll talk about them in the next video.